Welcome back to Investing with Confidence. As always, I am your host, Joshua David. We are having a great time, and Al was talking about how to be flexible. No, not with those yogi poses, but how to be flexible in the financial markets, how to be flexible with all market conditions, because we know the markets have three directions, not two, but three. They go up, they go down, and they go sideways in any type of market. If you happen to miss two tickets for the investing class, call 952-814-4410. You can also register for this free class by going to actually texting the word invest to the number 484848. You'll receive a text back to register on a link. Do that right away to receive the financial quick start kit plus two tickets for the investing class. So Al, as we get into this final topic and segment here, there's a lot of information out there. When I'm talking about out there, that is on TV, the internet, and we all know you can take the information and do what you want with it. But is it all good information? Are we being misled? Are we getting the wrong knowledge, right? So a lot of people take what they see and what they hear and might be a little bit misinformed and then placing decisions off the wrong knowledge. Right. So what are some of the things that you do to help people understand that first, but also make better investing decisions with the right knowledge?
Well, I guess the question to ask would be, why would somebody give you wrong knowledge?
And I can tell you why.
Let me tell you
There's
why.
a reason why.
Yeah, right. First of all, understand that the institutions don't trade like the public, but the institutions are conditioning the public on how to trade. So the same public that they're trading often and most of the time is on the other side of the trade from the institution. So
give an example real quick on what is something that they could potentially do for that. Like what is an example of misinformation?
Well, misinformation could be that, there's something wrong with this company, that we're really concerned about their earnings. We're concerned about the management team. We're concerned about the product pipeline. Why would they do that? Well, because they want the price to be driven down to the point that they want to buy it. You know what I call that? I call that the poop and scoop.
Yep.
You make something look terrible because you want to buy it at a lower price. Maybe the opposite, you hype up something because you want to sell it at a higher price. Look, the institutions have the clout to do that. They might even put in, let's say they put in $4 or $5 million into purchasing some shares of a stock to drive the price up. The public's going to follow that. The public sees that initial move, they start buying, and the institution or the hedge fund that initiated that trade, their goal really is to drive the price up to a point where they're going to sell a lot more shares of what than they just bought. It's hyping it. It's just causing the market to go the direction they want it to go because they want to take the opposite trade.
Exactly.
A lot of people say, well, why would I come into a financial education academy when I can get all this free information from my broker? Well, the brokers...
What is their bias?
Well, their bias, and think about this. If they give you a lot of information and part of that information is showing you how to be so successful that you're going to take your profits. Let's say you sell something, you have a big profit, and you've got all this cash sitting there, and all of a sudden you get a flyer for a nice vacation somewhere, or maybe there's a deal on a new car that you want. You might take that money out, and you might take that trip or buy that car. When you do that, what happens to the profits of the brokers?
Disappears.
It goes down because they're not making any fees.
Their job is assets under management, not necessarily managing your money. It's holding your money.
Yeah, we even know of hedge funds that will tell you, they won't tell you that they have actually let us know through means that they didn't know we would find, that they will say that they can't let the price of something get so great or the profit get so great because that will happen. People will take their cash away from them, and then they lose their income. So there's a lot of manipulation going on in the market that's done for the benefit of the big players. Sometimes they get caught. Sometimes it's illegal. Sometimes it's just a gray area, but they do that. So really the important thing is don't trade what you hear, trade what you see. And what you see and what we teach you to see or find is factual information that can't be manipulated, and sometimes that requires some patience on your part. Maybe it means that not all of the trades that you're looking at are worth taking, and and that's fine. You don't have to always be in something. You don't have to have a high number of trades or positions on to be successful. In fact, there are people that only trade one or two assets. That's all they do, and they're very successful at it. So it's identifying, how to determine where the entry and where the exit position should be. It's how to identify the proper asset for you to trade based on your unique situation and the market conditions, and then getting the right education, getting the knowledge on why you use something, when to use it, why you're using it, and then, as important or more important than the knowledge, the basic knowledge is the skills, building the skills to be able to use that knowledge. So that's what proper education does. And that's one of the things that we talk about in these classes that you have been talking about.
Yeah.
It's not only how we teach, what we teach, but it's how we help you develop the skills to use that knowledge.
You're right. I like the example that you gave with, if the smart market, the big players, the big banks, if they're gonna, buy millions, put millions of dollars in a stock and buy millions of shares, that can be seen on a price chart.
Mm-hmm.
And that's where us as individuals, we want to be able to identify that. We can get in as a small player, with our, tens, $100,000 accounts, $1 million accounts, whatever that may be. We're able as a small investor to get in and out of positions by being unnoticed.
Right. Mm-hmm.
Institutions can't do that. And that's where it comes down to getting the right knowledge. Where you get that right knowledge is on a price chart, because that's where you're identifying those entry points where the banks could potentially be buying, where they could be selling. And then you're not being manipulated by the news, the internet, or
Right.
what somebody else's bias may be. If you're that person, if you feel like you may need some, the right information, if you want to be able to develop the different techniques that the professionals actually use, Al teaches in investing classes right here in Bloomington, gets into these topics. He talks through market timing, how to time the market by letting price come to you. But also the key thing, and he's talked about this throughout this whole show, our step-by-step rules-based strategy for trading any asset in any market. So callers 1 through 10, if you're sitting at home right now and you want to learn more about that, you want to get those tools and the plan to hopefully make better investing decisions, you got to call in right now for 2 tickets. I'm also going to give away the Financial Quick Start Kit. This will help you get started right away. Call 952-814-4410. That's 952-814-4410. You can also text the word invest to the number 484848. You'll receive a text right back to get started. So, Al, we don't have a lot of time left here in the show, but about a minute here. I want to just cover what are some of the key things to focus on if someone's brand new to the markets. They have 401ks, they have IRAs, but maybe not investing in them, but they want to be able to make better decisions because they are worried. They do have a tough time sleeping at night,
Sure.
not knowing what to do. So what are some of the first steps you think somebody can do to really be that steward of your future?
Sure. Well, I think first of all, you need to understand or need to identify whether this is something that you think is right for you. If you're not willing to put a little bit of effort into it, if you're not willing to learn some things, then you probably shouldn't be making those decisions. Maybe somebody else will do a better job for you. But if you want to take control, and again, as I mentioned before, you're the only person that can do this without any kind of conflict. You're the best steward of your money. You're the only person that can wake up every morning, or the only person that is going to wake up every morning and think about your financial situation. A broker or advisor that has 200 or 300 clients probably isn't going to wake up every morning thinking of you specifically. They may think about themselves and their family, but understand that there are opportunities. There is a big difference in the returns that what we call the smart money get and what the typical public gets. There's a reason for that, and it's simply because you are not taught how to trade the same way that they are. I mentioned before that the pros don't trade like the public. So you can either trade like an amateur, or you can trade with the mindset of a pro of a like the institutions.
Yeah.
Which one do you think is going to be most beneficial to you?
Yeah. And here's a good term I always like to say. If you believe if you think you can or you think you can't, you're right. And those beliefs impact your actions. Those actions impact your results. So really taking action now, taking action today could help those results in the future that you have that opportunity. So Al, it's the end of the show, and I want to give away one last set of tickets to the investing class. We've had a lot of people call in and actually texting in and made it easy for people. It's just, that's nice, huh? One last set of tickets for the investing class. You can call 952-814-4410 for 2 tickets for the free investing class here in Bloomington. Covers topics in how to buy at wholesale and sell at retail like the financial institutions do, but really to improve your overall financial literacy. You can also text the word invest to the number 484848. Al, I promised at the beginning of the show you would have the OTA tip of the week. Let's hear it.
Well, okay, here's what you're going to find. There's going to be a relationship between what you know, how much you know, and then how consistently your successes are. In other words, the greater your financial and investing knowledge, the greater the number of financial possibilities that there are for you. If you accept the fact that the greater or the more investor knowledge you have, the greater the opportunities for your success, the sooner you achieve that knowledge, the more value it's going to provide for you. You can't experience true freedom if you are dependent on someone else's experience and knowledge for your financial well-being.
And really it comes down to consistency. That brings confidence to hopefully make better choices. One last set of tickets for the investing class. They're free here in Bloomington, 952-814-4410. As always, same time, same place next week. Until then, retire young, my friends.